Hey traders, what's up? Welcome, Jamie Saettele here. It is the SB Midweek Strategy Webinar, and it is 222, February 22nd, 2017. Let me know that you can see the chart in front of you and hear my voice. Good afternoon, says Conwall. What's going on? I see some questions here from Mohammed. Mohammed, you can probably hear me now, right? Because before you were saying couldn't hear me, but that was before I started talking. Okay, it's okay now. Great. Gary, what's going on loud and clear? Pete, okay. All good. All right, great. So let's start with the buck real fast. You remember back in early February, February 5th, actually, I put out this chart, one of the posts, one of the updates, basically saying the gist of it being that we were looking for a low in the dollar, for the dollar to trade higher through February and then top in early March. Well, here we are. It's almost the end. So February is almost over. So we're almost to March. And again, the logic here was that the time between the rally legs back here, 43 weeks, 43 weeks, even this one, the big 2014 one, took 41 weeks. Okay. So there's an obvious cycle going on here with strength. Anyway, we are now at 42 weeks. 43 weeks would be next week, which of course is the first week of March. And remember, the seasonals turn down in March, right? This is dollar seasonals. Okay. So we have gone higher in the dollar, but I wouldn't really say that I would really say we've gone that much higher, right? I mean, we haven't gone down, but we haven't really gone up either. So either way, this is setting up maybe for timing for shorts, like big time shorts, dollar shorts, at some point next week, or at least early March. So that's, big picture where the thinking is at. Maybe this is also one of those things. We have Fed minutes coming out later today. And I know that I don't think a lot of people are looking for a whole lot on it. What can they possibly say that's not already known, especially after the Humphrey Hawkins testimony from Yellen and her prepared comments last week. But if we do get, a bigger move, this could be one of those things where it's like nothing happens for 3 weeks, and then you finally get the move, and it takes like all of like a couple days, and it kind of makes up for basically nothing happening for 3 weeks. This is the long-term dollar. You're still on a support line, right? And of course, the short-term dollar, the one that I've really been focusing on a lot, right here, based on the June-September trend line and the associated parallels, right? The month open at 12,309 is really the level to be if we get it in, based on the timing of this, coming into an early March top, you kind of have to think that it's got to happen. Like, if you're going to get to drop into there, then it's going to happen over the next couple days, right? And then maybe a jackknife higher, if you will, because the ultimate resistance that I'd be watching and still watching for are on these parallels up here, right? The magenta parallel. Okay. So for me, this U.S. dollar chart really is, it really keeps me focused on like the important levels, like all this here, right, is really kind of BS. Like all this, all I care about is I want the level here, right? I want to be dollar bullish into this level. I want to be dollar bearish into this level up here. If we get above the median line, right, and you say, why don't you just turn dollar bullish now? why don't you turn dollar bullish now? And it's saying, because if you think we're going here, well, what if we go down here first? Or what if you just go down here and you fall through? So you got to get your level. And also, don't forget, we've come to this median line, which is also a big level, right? It's been resistance before, it's been support, consolidation on the uptrend breakout after the election, support back here late January, resistance in February at times, and then resistance here yesterday. So you are pressing into minor resistance. Big resistance is still up here. And we have a question here from Mohammed. Speaking of cycles, I noticed there is a cluster of cycle bottoms on the DXY this year, April and August. So you are referring to, I'm not sure exactly what cycle you're referring to. If you have a fixed length cycle or something that you're looking at, there has been a tendency, the dollar index tendency for, or at least for, seasonal purposes is actually, April kind of in May bottoms really. You can see that over the last couple of years, March tops and May bottoms, right? Okay, 2015, March top. Okay, last year, March top right here. 2015, May low, okay, in the dollar, May low in the dollar. In 2016, even 2014, you had a May low down here, right? That was the euro top. In 2014 was the May 7th low. That was ECB that day. And you had the dollar go back and make a new low in July, but the euro did not go back and make a new high. There's a big divergence, right? So, speaking of cycles, those are really big ones seasonally for the dollar is March and May, right? Early to mid-March, big dollar tops. At least tendency to do so. And early May, dollar bottoms, right? And you can see that again in the seasonals. This is a different looking seasonal chart. This gives you the tendency and the degree of the tendency for each month. Okay, so January, February, March, April, May, June, and so on and so on and so forth. And then over 30 years, 20 years, okay, 15, 10, and 5. And yeah, and you can see that April is actually one that is bearish across the board, across every single look back period. April is bearish, so it's not like a new phenomenon. April's just a bearish month for the dollar. Okay, and then you can see May is actually the best month, May, and then November. Okay. All right, so let's move on there. That's just the quick dollar rundown for you or thinking. It's still on my mind. I know it's like beating a dead horse when I'm looking at the dollar and showing you the long-term support and the short-term support, but it's important to have this front and center so that when you do get a knee-jerk reaction like we could get with, say, coming up with, say, either the minutes or even month end. Okay, and stock markets have been very strong this year, this month, right? So that actually may put pressure on the dollar as we head into month end on Tuesday. I think Tuesday is the last day of the month. It is the 28th. And what that means is that you're going to have, because you'll have stocks going higher, which means portfolio managers are going to have a lot of stock on hand, and they'll have to basically sell dollars, okay, in order to, kind of offset some of their position. So that could put dollar selling pressure month end. So maybe we get down here by month end. I don't know. Either way, something to think about. I'll have more to say about the month end stuff and the fixing as we get into next week, Monday, and I'll write some stuff in the Monday update for it. Okay, so let's go to, I want to take a look at dollar SEK real fast. Dollar SEK is always known as a kind of a bellwether for the dollar, right? Bellwether meaning that it's, Mohammed's got a great long question, and I'm going to get to that, my friend. I will absolutely get to that question. It's an interesting one. I think probably a lot of people have the same question, so I'll get to it. And I will, in fact, I'll publish it here in a little bit and I'll get to it. I'm going to go through some of the prepared remarks that I've got real quick. Dollar SEK. Okay, we're testing big time resistance here in dollar sec, which tells me we're testing resistance in the dollar generally. Okay, specifically against European currencies, right? You remember we had one of the main reasons for turning dollar bullish at the end of January, early February was the fact that dollar sec had gotten back down to support, right? Well, we're now into resistance. Year open is beautiful up here at 910.50, but you're at resistance now, and you can't discount the fact that you could have a really sharp down day or two or three from this level. It's the underside of a trend line. All right, really good looking level. Euro. So we had gotten, or I had bought basically on this median line, and I guess it was a dumb buy, but it was a good trade. And like you're like, what the hell are you talking about? It's a good trade because it had a stop loss at 105.90, right? You can have a good trade that's a losing trade. Losing trade 105.90, and we got out, and good thing because the market fell 100 more pips, right? You can have winning trades that are bad trades and losing trades that are good trades. That's how I see it. So what about now? Well, I tweeted out this morning, look for 104.66 as a big level year opening price and on a really long-term parallel that we've been following. Remember, I know there's a lot going on here, but this is the lower channel line that cuts through a lot of good stuff. You do have this short-term former line too, probably down there. After the French election news came out this morning, it may be that you already have a good low in place at 105, just below, I should say. And really, probably 105.30, again, the weekly reversal level, 105.20, 105.30 is probably the level to pay attention to on a short-term basis. The median line back up here might be a level to watch again for resistance. It's about 106, and that is the weekly open at 106.05. Okay, so you gotta like how the euro is reacting up here, but 106 is probably the test. Okay, on that. Might be better trades in the crosses, on euro crosses, which I'll look at after I look at the dollar majors. Okay. Cable, same thing. All right. 5 waves up, wave A. All this stuff is a wave B. And we went through this pretty in depth last week, actually, during last week's webinar. And we are certainly seeing wave B action, right? It's good to have an understanding of waves for this, well, simple standpoint of you want to know what kind of environment you're in. You notice that like I've had some entries, they haven't been triggered, but we've been talking about basically wanting to put entries up at certain levels, right? And that's because you know that you're in a range, So we're in a B wave range. B wave ranges can be nasty. Does not mean that you can't get back up into 25, 40. Okay. But if we did, then it'd probably be back down here. Okay. Ultimately, we could be getting a low on this parallel down here. It might be in the, below 122 for all I know. All right. Nothing's really changed with cable, the way I see it, the way I want to trade it. It's just that 25, 40 is resistance. And, we'll deal with support when we get there, but I have a feeling that it's going to be down near, 122 or even a little below or even a little higher, because 2 legs down would be 22, 23. You have a slope confluence at the very end of the week at 2190. Okay, but if we don't get there by then we might be looking for higher prices on the parallel towards the beginning of March, right? Maybe next week, which would be over here. Okay, let me draw this for you so that you know exactly what it is that I'm taking a look at. And look at this, dollar sec has retraced it all, and we are almost negative on the day. So this was the daily chart, and hope those comments make sense yesterday about the about the looking at short-term and long-term charts, shorter-term charts during ranges and long-term charts um, during trends. So you want a good fork to trade on, right? And there's not much of a question in my mind that this is the fork to trade on or the slope to trade on. I mean, look at all this, right? Beautiful support on this thing, okay? Thing is, once it goes, and I think it does, because again, we're talking about A and all this B wave jargon over here, okay? A, B, and then C wave down, you would get, end of the month, next week some point, you have 122 in line right here, the lows back here at the very end of last year and the very beginning of this year. That's on the lower parallel, and two equal legs down is 122.23, and that's essentially next Friday, which would be after NFPs. And the cable seasonalities, right, calls for a low on 3.3. There's some really big seasonal turning points for the British pound during the year, and one of them is actually next week, okay? So we're in a weak period now, but that's coming to an end. Gary, yep, asking about the abomination for those that don't know, dollar yen, and gold correlation. Yep, we'll take a look here. Absolutely. Some good questions to get to today. Okay, so in fact, you know what? Look at dollar yen. We're going to look at dollar yen right now. That's actually the next one on my list. So dollar yen, the levels here are clean as day two. It's a matter of waiting for them to see if they're going to get hit and you can trade them, right? So the really short-term stuff, is traded. This is a daily chart. And again, much better to look at a chart like this when you're in this range on a daily, gives you perspective, right? Than trying to look at something like, say, the 60-minute chart, because now you are more inclined to chase crap all over the place, in my opinion. Although the levels are the same, right? But I'd be willing to sell into 114-ish, 114.17 specifically is the daily reversal level, okay? And that's just the close from that day there. Your good support, again, is still 1238. 112.38 is the daily reversal support. So here's your support. Here's your resistance, okay? I prefer to be on the long side in dollar yen for a bigger move, okay? At least over the next, probably few weeks or so. But I'm not going to be chasing dollar yen either. And there's several reasons for that. One, I just don't like chasing anyway, and we're not in a current market environment where the market's been consolidating for extended period of time where it's even worth considering trying to chase a breakout, in my opinion. And there's a lot of risk on hand with the S&P and what it's doing. You saw, for example, when we got like one down day in the market last week, what happens? Dollar yen got smacked, and it was like one down day, right? So here's the S&P, and again, it's still higher and the big resistance is still higher, but up here, I think we can pull back. I was looking for a pullback from 2368. This upper parallel, I don't know. It looks like 2371, 2372. If you get up there again, either way, the big support level is probably the early year channel resistance. Okay. Yeah. Let's see. I'll get Mohammed. I see your comments here. Just a second. Yeah, well, Mohammed, the real quick, talking about pulling trigger on yeah, the big move for me is going to be on the long side in cable. That's the thing. I'm waiting for I'm waiting for three waves down on cable, right? So I put in orders to sell pound yen last night. Wasn't triggered, but that's okay. Uh, with pound dollar, as we just went over, um, your resistance if there's a sale is probably again 125.25 to 125.40, right? 125.40 has been something of a resistance point and support at one point since December, right? So that's a big level. There's nothing. I mean, if you want to trade on this, more than welcome to, right? But as it is from my standpoint, right? I'm a seller up here and a buyer on the final puke out, whenever that may be. That's how I see it with cable. All right. That's about it, though. Okay, so moving on. Where were we? Dollar yen. So yeah, the levels that I want to trade dollar yen are 114.18 or 17, excuse me, and 112.40. Okay, 112.40 to take it a lot higher. And we were talking about the S&P in that regard, and the line here, blue line, essentially this is your very early channel, and you can see the trend line support, the trend line resistance or channel resistance came back, kind of acted as support on the way up. I'd be looking for it to act as support again for us to continue higher. So a pullback from here or even 10 points higher, you get back into this level, maybe it happens early in March if there's a confluence over here or whatever, or late February, which again is just a couple days away. And it puts you, down the 23, high 2330s, right? Basically back to the low that you had just last week on the 16th. So that's an area that will be of interest for longs. But of course, if you end up getting a pullback like that, then I think the risk is probably that you get maybe a lower dollar yen. So, which is why if we get up into 114, above 114 in dollar yen, it's resistance on the chart anyway. So I'm looking at it as a short candidate, right? Now, what about gold? Because they go hand in hand here. Gary's asking about the correlation with gold. So we take a look at gold, right? You're starting to see, you got this big bounce yesterday, right? Dollar yen didn't do a whole lot. Gold's coming off again here today, 1240 down to 1231, $9 drop. You are seeing a bounce in dollar yen, right? 1290 to 1350. So I mean the correlation's still there. One thing I'm wondering is if this ends up as a triangle and we're going to get one little burst higher. If that were to happen, then you know what? What you're going to get is you're going to get that dollar drop into the month open at 12,309. You might get euro to spike higher, and you might get dollar yen to spike lower into 1240, and that's your short position, for gold, and long position for dollar yen. So don't worry about the intraday correlations. Just understand where the Let me pull up a futures chart. Understand where the peaks and valleys are. And at this point, this is contracting. So this is not, to me, something that says that the gold rally is 100% finished yet. We might need another thrust higher in order to, before we can really roll over, because one, you're still above support, and two, this is just very consolidation-like in nature, right? Pull back, rally, pull back. Okay, rally, pull back. Looks like a triangle. See if we can pull up a chart and put the futures on both. See if we can tell something. Here's gold futures. We're going to put in Japanese yen futures. All right. Leon asking what pullback I'm looking for longer term. Glad you asked. It's right on the chart here, the long-term chart. This is the piece from back in early in the month. I actually think gold could fall for most of the rest of the year, actually, potentially. For right here, be looking for something like this. Okay, so you can see that the long-term page. Basically, on a long-term basis, you could be coming back into okay, here's all right. So you see the black bars are gold and the red green are yen. Let's say that we have non-confirmations, right, are classic when it comes to big turns. Like back here in December, what happened, right? You had gold and yen both bottom at the same time, meaning dollar yen topped. January, first day of the year, you got a new low in yen, high in dollar yen, but not in gold. You might get something similar, but the opposite here. If this is a triangle, you might get one more thrust higher in gold. Okay, one more thrust higher in gold. I'm not sure how high, but one more thrust higher in gold, and then it pukes out where you're getting a move in yen up to 112.40 or down to 112.40 dollar yen, which is a higher move in yen, lower in dollar yen. Okay, where you've already put the high in yen, low in dollar yen. Does that make sense? So that's something to watch for. Meanwhile, Leon was asking about the, say, how much, like, bigger picture gold. Well, we have this fork that we are working with, right? So I'd like to think that 1122 from December is a low or is the low, but the timing of it and the situation, to me, on this and the analog, maybe warns that maybe gold's just not ready to really go yet. In other words, it may rally and decline at points, but the big move may not really start until 2018. That's all. Okay. So for gold, though, yeah, I mean, if you're trading at 12, it's still the same thing. 1250 is resistance, right? And you're still on supports, and you're coming into a support now, and would watch this level for resistance, just like it was resistance up here, Okay, so there's that. Dollar CAD. Dollar CAD 32.80. I like 32.80. And we put up the piece or the chart this morning, this one, right? It did hit 32.10, pulled back to 31.60 or 31.70, excuse me. That's support. 32.80 is the big area. And 32.80 is just the May, August trend line, which was support back here in December. It's your big level. 32.82 is the 50% retracement from the rally back here. So we get up into 32.80, might be able to pull back from that level. In the meantime, I would be looking at maybe, 130, 120 as a support. Okay. Maybe a level to buy. See if, if market wants to hold above the median line. Again, you've got, because of the holiday that we had in the US, you're getting the crude inventories tomorrow. Okay. So they're a day late. And I do think that crude oil still goes up into 56.50, but maybe not before it gets to 52. Okay, 52 bucks. Good horizontal levels, right? 52. You've also got the higher floor there, 52. And this is also where I start to talk about, where I can talk about technique withdrawing on log scale, right? So before, what I would have to do when I was looking at a log scale chart is I'd have to print out the chart and actually draw it with a ruler, right? Because what happens when you draw if you drag a parallel on log scale, right? It does this. It changes, right? So there's actually, if you use TradingView, there's an option to show the angle. So show the angle. So I know this is 8, right? So then I can just draw from here, and I can just draw so that it goes to 8 degrees. See, 8. Isn't that beautiful? Isn't that great? I love it. So yeah, so this says that your 5650 region is still your really big area. When it gets there, and I would watch for 52 as your support, right? So 52 support, 5190, yeah, right there. Okay, so 5190 support, 5650 resistance, and then it can puke out hard. So that is how we have crude oil marked up. Aussie and Kiwi, I'm really not even going to go over because I think you know exactly what we're looking at there, right? We have great charts in the updates here, recent updates. What was the 19th? Yeah, Kiwi chart, here's the daily. Still support, 72.60, still resistance. Okay, great. Aussie weekly, resistance. We're at resistance. We've been at resistance for 3 weeks. It's dead. We're at some of the lowest volatility right now. It is the lowest volatility we've seen in years in Aussie. So that'll give way to a bigger move at some point, but what else do I have marked down here? Okay, silver, copper, net gas. And then I want to go through a question that Mohammed asked, which is a really good one, about the general market condition. Silver, copper, net gas. Okay, so silver, these are all following the exact same levels that we've been looking at for a long time. You know, 1837, 1846, that's resistance. Okay, it still is. The big support to buy on silver is probably going to be down on this line that has the blue circles on it. Okay. The market's been very slow to do anything, right? You know, you're going to get, it'll probably be one of these things where you get up into 1836, 1837, 1846, and then it takes you like 2 days to get here. All right, so don't try to be forcing anything in these conditions. Wait to get your level. So here's I can draw, because this is a log chart, so I know this is 22 degrees. I want to draw a 22 degree chart, or 22 degree line, okay, and see if it cuts through any good stuff, say down here, right? 22, 22. So there you go, 22. So that's the same as that, where I can't really drag that anywhere on a, I can't drag that on a, you know, on a regular chart. Not too sure about this line still, because it's just there, right? It's just 2 points. So same levels though, right? Minor support for silver at 1760. Big support for silver probably on this line. It's going to probably be below 17. Okay. Big resistance for silver is 1837, 1846. And that's that. Okay, copper, same thing. Okay, you are still at this long-term resistance. You had a big key reversal last week. The market's still at long-term resistance. Okay, really, it's been at long-term resistance, like Aussie, going on for 3 weeks now or so, right? Ever since February started. We're in a big uptrend, but in uptrends, you're going to have pullbacks. And given the big level that we have and the fact that copper was featured in the Wall Street Journal yesterday, which I put in the post, okay, you got this trend line here holding short-term trend line. That would be a trigger for a break. If it does break, I think you probably head back to 252, maybe even 250, right? 250 would probably be the spot. In fact, that's not valid anymore because you made a new high. So it'd be closer to 250, the blue line. As far as short-term resistance, if you're going to see short-term resistance, watch the close of the high day, right? If you have a high in place, your resistance is going to be 278.45. Close of that day is 278.45, okay? 278.45, that's the level to watch for resistance. If you get there, and again, below here is a break. Nat gas, I remember last week when we looked at this, we were sitting right here and we were about to break, or we did break, right? And we broke, said just follow this fork. In fact, follow the quartile lines, the 25 and 75 lines, and lo and behold, guess what happened? Today's low is on the 75 line. Okay. Nat gas has broken an uptrend. At this point, there is no reason to look higher. Okay. The market has come into support from these lows here. However, this is a broken trend. If you were to get a 6-strong rally for a couple days back up into 295, you would have a confluence for resistance, and that would be an area that you'd be looking to short, because it would be resistance from downtrend fork as well as resistance from former support. Okay. Okay, and we had a question here from, I had a good question from Mohammed asking about, given the high level of uncertainty about Trump policies and decisions at the moment, I keep asking myself what is wrong with the markets? Why do they not see? Why ignore the rapidly developing disaster? Are they so sure of their own competence? Well, okay, so what you're saying is completely subjective, okay? Um, High level of uncertainty about Trump policies. I mean, you know, politics and market, I know everyone wants to talk about them together and knee-jerk reactions and this and that, but look, markets run on supply demand, not on politics. Um, so I'm guessing that you're probably referring to the stock market generally, and that's, where the S&P, that's why I have this long-term analysis too, right? S&P 500. Okay, you guys, I mean, make sure you check out the long-term pages, right? This stuff is updated infrequently because it's long-term. But, this is written at the end of January. I'll offer two levels to know in the Dow. Okay, 2192 and 21,330. For S&P cash, levels are 2335 and 2459. Okay, the upper parallel crosses the levels in May. So then sell and go away. There is no change to this. Okay, this market is going higher until May, at which point it can then sell off. So, and that has nothing to do with politics. I mean, you have a massive breakout and everyone's trying to fade it. We've gotten to 2335 already and a little higher than that actually. So here is again, the short-term chart, right? We looked at this earlier. Basically, wait for dips within the confines of these levels. You want to be a buyer probably back near 2335 at this point, okay? And then the long-term charts that are on, they're on here. The weekly chart, yeah, here it is. I mean, this is just a channel, folks, and the channel resistance is not until up here, right? So might as well wait until resistance, right? I mean, I could care less about Trump or Hillary or freaking Donald Duck or, Oscar the Grouch or whatever other characters my son likes. To me, they don't really have anything to do. They're not going to help me make any money, that's for sure. As far as trading the S&P is concerned, what will help me is that I'm not turning bearish until we get up to resistance, which to me is defined by trend lines that are based on trend channels, that is based in, time-tested, long-term, market techniques. And again, are you going to go straight up from here? Probably not, right? We're probably going to get what will feel like the end of the world to everybody because everyone's used to the market going straight up. But if we pull back to 2335 or so, count me in. Great. Look for support, okay? Tight risk, and then look higher. And then you've got 2460, 2485, and that would be the spot to get, start buying your out of the money puts up here. Okay, and that's the S&P. When it comes to the Dow, it's the same channel lines, but obviously the prices are different. 21,332. This might actually be before May. you do have, hold on, let's see when that lines up. It looks like this does line up. $22,000. It looks like that lines up in 2 weeks or so up here. So if you got up to 21,330 in the Dow in 2 weeks time, then yeah, I'd be looking for probably potential for the market to turn hard down there, because that would be something like you see in a blow off top. All right. Yeah, Mohammed talking about the utilities, which he thinks a leading indicator. Well, yeah, because the utilities are like the bond market, right? It's based on interest rates. And yeah, bonds have turned down hard, just like, and so, yeah, stocks will roll over, but you got to wait until they get to where they got to go first. So it does no good to be being this early, is in like there's still 600 points left on the upside in the Dow. Okay. If you're that early, you get margined out, or you won't stay with the position because you won't, you'll be wrong for a while and you don't want to wait it out. Rather than just be like, I'm going to be short or bearish because the market at some day is going to go down. Okay, that's no good. You need to do it at the right level, and the right level to do it, I don't think, is until Dow 21,330. Okay, that's the breakout from the range from 2015. All right, and there's precedent for this. The same thing happened in 1987. Let's see. Let's see here, Dow. So here's a daily chart, okay? If we go back, you see the shape here, this flat pattern, right? Boom, 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 A, B, C. If we go back to the 87, that's how the market did the same thing coming out of 87. You had a flat pattern, A, B, C. It was actually smaller, but you had a flat pattern. And the top was around the 200%. It was actually, if you really want to get interesting on it, there was a fib relationship of 786 between the prior leg. So the prior leg high was 786 related to the prior leg, right? So September 86 to the high up here to the low in April 87. Measure that by 78.6. And you got 27.27, and the high was 27.47. Okay, 20 Dow points off. Well, guess what happens when we do something similar between now? So the part that compares, you got to almost look at it on a weekly chart, because, but is this leg right here in October of 2011, and you got to compare that. I think it's October 2011 at least. Yep, it is. Here it is. Okay. So if we do that, if we measure that 786 from the difference of the prior leg, you get 21,616, which is pretty close to the 200% extension level of 21,332. Okay. And then again, if you draw your trend line, okay, you get up there as well, right up in here, sometime in March or April. And I should probably do that back with 87 to show you that the same thing happened then too, which is the trend line. Yeah, here it is, the trend line. So again, you need to go to daily when you're looking at the 87 market because it's a smaller version. Okay. So we measure from here, which is the origin of the, insanity on the upside. And that's all you need is your trend line, okay? So you can see cross off the tops. And you will find where the market is likely to run into a top, okay? So that's my spiel on the stock market for the time being. Basically, you have probably 600 or so points higher in the Dow before you can start thinking about a really big top. Until then, weakness should be basically looked at in the context of pullbacks before you go to higher levels. Okay? That's probably going to be supportive for dollar yen. So pullbacks in dollar yen should be bought. Okay? And 112.40 is obviously the level that I want to buy it at. Getting into what we're talking about right now. All right. What about some crosses? Euro Aussie, for example. Great chart here. Talked about this today. Euro Aussie. Yeah, I mean, I think we probably hit a low today, and we're probably headed back to 139.60, 139.70 before we go lower. The weekly's real clean. Again, you can see how we took out the 2015 low parallel right here off of the low from late 2015 as well. And looking for a bounce back to the median line and then lower. So good clean stuff in Euro Aussie. Euro Yen was one, of course, that I posted support there this morning, and sure enough, with a little bit of luck, the market rammed up higher over 100 pips. But yeah, interesting how it happens from the level, isn't it? So you do have a good level here in Euro Yen. I'm not. See what the rally looks like off the low. Yeah, you got 5 waves up. 1, 2, 3, 4, 5. So yeah, I mean, you could look for support here. I'd be looking for support at like 1930, 1940 for Euro Yen. Again, I'd rather trade dollar yen separately and euro dollar separately, just on their own levels, because that way I'm not getting confused. And that way I know exactly where I want to be buying and selling, rather than looking at this and having myself second guess it. Euro CAD, also kind of liking it higher. Even though slope support is lower, like the trend line back from 2012, I would be watching for resistance back probably at 40.40 as a first area. It's not so. I'd rather trade Euro Aussie. Looks a lot better to me than Euro CAD at this point, right? So let's stick with Euro Aussie, but And then euro pound got a really good support here. You're getting a reversal here today on euro pound. And you know what else is down here? Was the 200-day average as well. I know that everyone's talking head and shoulders on this thing, but you can also just have don't forget, this is not a head and shoulders until you break basically below 83. Until then, it's a range and an uptrend at that. So you still have an uptrend on euro pound. You can still go higher here, especially given the fact that you are reversing higher, putting in a J spike on a daily basis at the 200-day average at support. Euro pound looks like it wants to bounce higher as well. Go back to resistance, which again might not be until this trend line, which could be all the way back up near 87. And Mohammed asking about Kiwi yen. Sure thing, Kiwi yen. Probably here going to end up as a triangle of sorts as well. Again, strong uptrend. Okay, everyone gets excited and wants to call this a double top. It's not a double top until it breaks the lows. The lows have not been broken. My guess is that this probably ends up as consolidation, fairly broad consolidation. I don't, if you were to, okay, so if we, let's say this. I looked at this, I think last week, but here's a 240-minute or 4-hour chart, okay? Draw your trend line here. Okay, so there's a level to work with. You can see that you've hit some good levels here. You did not get down to support there. This level here. Nothing great to work with on Kiwi yen. Nothing real precise. It just isn't. You know, the best. I don't think the market's going to come straight off here, though. I think you probably bounce for a little bit, and you have a great horizontal level to work with at 82. So I would mark down 82 as a level in Kiwi yen. You can see the highs here, okay? Good resistance, good support around 82. Trend line at 82, okay? What we would call basically the former median line at 82 as well. Again, if I were to draw something like this in, you can see what it would look like, right? The channel, it's right there. So that would be right at 82. So just follow 82. Okay, 82. Remember too, we are kind of thinking that Kiwi gets something of a bigger bounce, or at least I am. Maybe because there's still a support in 200-day average here too. So I'm thinking if you get a bounce up to 72.60, you know, maybe dollar yen comes off a little bit too, but you're probably likely to see, you know, Kiwi yen hold up as, you know, with this S&P so-called risk move. Are there any other questions that we can try to answer here today? Oh, Mohammed saying South African Rand, sure. Here's South African Rand. The downtrend's underway. It's been underway since we broke the trend line early in the year. Okay. You can see here we broke the trend line. The level that I'd be most willing to, if you wanted to trade this from the short side or get back, get on the short side. Essentially watch this red line, the parallel. You could probably get a little more precise on it, I guess. Could probably put it right there. Yeah, because it crosses through the highs here. And I'd watch that level. But yeah, dollar rand is headed much lower. And there's a piece on that I wrote a long time ago. And here's the weekly. Okay, so you can see it's repeated itself as far as the shape. And the target for it is the last place with which the market ended up finding a support on the channel, and that's 1090, 1091, 1090.70, call it what you want. And that is obviously a lot lower because we're at 1305 right now. So working towards that level, you have resistance again on this red line, which is just based on the trend line back here from January to May, okay? And it's, 1330 or so. And ultimately, your lower channel line is probably going to be in focus at some point. This is actually a very bearish type of behavior where the market kind of spends a lot of time up at a resistance point. Okay, you kind of riding on the resistance. Mohammed's saying, I have the same level that you mentioned, but I find it very hard to believe. Well, I don't know why is it so hard to believe? Don't forget that the really good moves are supposed to be hard to believe. Anyway, moving on here. Let's go to, what was I going to say? Oh yeah, so there's an example. So you see how this was riding all this resistance the whole time and we're looking for it to fall apart. Copper futures did the same thing before they fell apart. So like it kept riding on this resistance and it fell apart, right? Right. So point is that dollar rand chart might be really something to follow. Mohammed's saying from a fundamental point of view. Let's see. Yeah, I mean, fundamentals are. I don't really even know what that means. Fundamentals. I guess. I mean, dollar rand's been falling for a year, over a year, right? Just follow the price and follow the charts and support resistance and all this other stuff. It tends to work out well, right? From a fundamental point of view, you'd be bearish stocks still. So I don't, the fundamentals. That doesn't even make any sense to me. Fundamentals. So Fundamentals are price, right? The market is fundamentally in an uptrend. Gary asking about webinars next week. No, I will just be doing my regular webinar. I am not doing the intraday stuff. But yes, that's all I will be getting into as usual. So everyone have a great, I think we have the minutes coming out in an hour. Okay, so get ready for that. Again, we've got some good levels here in Euro. Pay attention to 106 on the upside. Dollar yen probably has the best levels at 114.20 and 112.40. And dollar CAD 32.80, 31.20. And pound, if it wants to finally break, great, and maybe we can try to get a short entry on it at some point. If not, it's still in a range, and resistance is still 25.25, 25.50. All right, in big picture, the dollar, this is still support down here at 12.309 or 12.308. The big resistance is still up here at probably 12.500 or so. And we might be going into, or we are going into the dollar bearish period in early March. So early to mid-March is when the dollar does tend to put in a good top. Okay. All right. So let's end it right there and get ready for minutes. Take care, everyone. Have a good, safe rest of your week. All right, bye.